Hi YouTubers, this is Kevin, your financial freedom architect, and my specialty is to help millennials, people who are my age, a little older, reach financial freedom prior to the age of retirement of 65. Today I just want to go over a brief calculation of what you'll hear from the average advisor of saving $5,000 a year over the course of 30 years, and them expecting you to be able to live the remaining years of your life off that small amount of money. So let's go with some numbers. So let's do 5,100 actually a year in savings into your retirement account, whether it's a traditional IRA, Roth IRA, 401k, 403b, etc. And you divide that by 12, that'll give you $425 a month that you will be saving over the next 30 years or 360 months to retire. Now let's see what that number is. $425 a month saving for retirement times 360 months or 30 years. That is $153,000. Is that a lot of money today? Absolutely. Is that a lot of money 30 years from now? I would bet no. Is this a sufficient amount of money to sustain your next 15, 20, 25 years of your retirement once you reach 60 or 65? Because the average life expectancy of a retiree for males about 78 to 82, for females about 80 to 86. So for argument's sake, let's say when you retire at 65, you live another 20 years to 85. So that's $153,000 in your retirement account over the next 20 years. Let's see how much money that will yield you every month. $638 a month. Now we all know this is not a lot of money. $638 a month, that will not cover your housing costs. Now if you were to purchase a property in the near future, prior to retirement, let's say you're 30 today, and you plan to purchase a property in the next 3 years, a $638 a month mortgage payment would be roughly maybe $125,000. That's going to be tough if you live on the East Coast, if you live in areas in the South, like Texas, Atlanta, maybe New Orleans, if you live on the West Coast, and if you live in the Midwest, in areas outside of Detroit, Ohio. $100,000 to $125,000 may not get you the property that you want to live in. So, what can you do? There's a few things. But let's do one more example. Let's say, because I know advisors who may look at this video and say, well, he didn't mention the return on their investment. Okay, let's say if that money doubles. So your $425 over 30 years, and you're going to times that by 2. Now this figure is $306,000. I'm not accounting for any taxes that will be taken out, capital gains. Depending on your marital status and income, it could be anywhere between 15 to 25%. I'm not accounting for any broker fees or online fees or any other fees that will be deducted from this amount. Not to mention income tax. You'll also be taxed via income on this figure, but I'm not accounting for that. So $306,000, you have that in your account 30 years from now, and let's see how much money this will yield you every month for 20 years. That equals $1,275 a month. That's a little better, but the average individual in the U.S. spend 50 to 75% of their income on housing. So, for argument's sake, let's say for you that is 50%. So we divide that by 2. So we back at our original figure of $638 a month. So you're 65 years old now. You have $1,275 coming in from this retirement account. Half of that has gone to housing. Your mortgage, your rent, your utilities, your taxes, insurance, what have you. So now you have $638 remaining for food, for water, for medicine, for health care, for insurance, for clothing, for entertainment, for travel, for any activities you plan on doing once you retire, and money to set aside for your children and your grandchildren. This is not a lot of money. Can it be done? Possibly. Will I suggest you take this path? Absolutely not. This path here would lead, sadly, to a lot of retirees having to go back to work because they listen to advisors tell them to save $5,000 a year, and that money will compound, and once you reach retirement, you have enough money to live off of. It's not going to happen, especially not now. So those are the calculations, and my advice, which I will go into more depth in later videos, is to invest your money in income producing assets. One last example. Using my strategy, what I tell my clients as their financial planning